Good morning, everybody. Happy Friday to you. This is your market update for Cinco de Mayo. So we'll get right to it. Yesterday, Federal Reserve came out as the market expected, said they were going to hike the Fed funds rate by another 25 basis points, which was no surprise. The market was really looking for any kind of indication from their statement and Jerome Powell's press conference on what their plans were moving forward, which they really didn't indicate. They didn't give any clues. They did kind of, through verbiage, though, I think, lay the groundwork for pausing rate hikes moving forward. The market, I do think, is anticipating that they're going to have to cut the Fed funds rate at some point in time, although Jerome Powell denied this. But I think the market is anticipating 2 to 3 rate cuts this year. So we'll wait and see what happens. Obviously, a lot of that depends upon what inflation numbers and employment numbers show moving forward. Speaking of employment numbers, the initial jobless claims that came out yesterday for the week prior, which is people filing unemployment claims for the first time, showed an increase in claims filed of 13,000. So that would show potentially that layoffs, people are taking longer to find a job when they're laid off. The layoffs maybe are increasing a bit. So, would support cooling in the labor market. But then you have the jobs report that came out today that showed new jobs of 253,000 in April, which was significantly higher than what the market was anticipating, which was 165,000. In addition to that, the unemployment rate ticked down a slight bit to 3.4%. So that supports that the labor market remains strong and could potentially give the Federal Reserve reason to potentially raise rates higher or wait longer for a pause, or certainly give them a reason not to even consider cutting rates this year. So again, we'll wait and see what happens. Stock market on the day is rallying on the strong jobs number. Dow's up 453 points, NASDAQ up 181, S&P 500 up 57. Mortgage-backed securities, after having a really good day yesterday, closing above that triple level of resistance that we've been battling, and still maintaining there today, but opened down initially 25 basis points. And last I looked a few moments ago, 27 basis points. So actually kind of falling below that triple level of resistance. So we'll wait and see what happens. Maybe we'll get a late afternoon rally to get back up above the triple level of resistance, which I think was the 200-day moving average, 25-day, and 100-day moving average. So we'll wait and see what happens. Freddie Mac published rates came out yesterday, did show a slight decrease in the 30-year fixed rate by 0.04%, currently sitting at 6.39%. The 15-year actually increased a slight bit, 0.05%, now sitting at 5.76%. So that's kind of the week in a nutshell. Lots of information came out this week. Most of it was bond friendly, not so much stock market friendly. However, that's kind of reverse course today. Stock market having a great day. Mortgage-backed securities not really having the best day. But we have had a good week overall. Hope that you guys have a great weekend. Have fun tonight, and I will see you on Monday.